If you want to capitalize on daily market volatility, intraday trading offers some of the most frequent setups. But zooming into shorter timeframes comes with a massive hazard, the false breakout. You spot a surge in momentum, take the trade, and the market immediately reverses to spring the trap and wipe out your position. To survive these intraday swings, you need a way to filter out that noise. That is where the 15-minute Bollinger Bands breakout strategy comes in. In this video, we are going to build a complete mechanical trading system step by step. We will set up specific indicators to catch true momentum and filter out the fakeouts. When you trade highly volatile markets, hesitation is deadly. Having a strict set of mechanical rules removes emotion from the equation, letting you execute with precision. Step 1 is selecting the right environment. This strategy requires assets with high liquidity and significant daily price movement to actually generate breakouts. Gold, or XAUUSD, is an ideal vehicle here, along with major, highly volatile currency pairs. Once you have your asset, open your charting platform and set your candlestick time frames strictly to 15 minutes. The 15-minute window is the optimal sweet spot for this specific setup. It gives the market enough time to confirm a real trend while keeping you insulated from microscopic second-by-second price fluctuations. Now let's add our indicators. Start by applying Bollinger Bands to your chart. We need to adjust these from their standard configuration. Keep the period at 20, but reduce the standard deviation from 2.0 down to 1.0. Watch how the bands tighten directly around the price action. Next, add the Moving Average Convergence Divergence, or MACD, indicator to the bottom panel. We are converting this into a slow MACD. Open the settings and input 64 for the fast length, 128 for the slow length, and 12 for the signal line. Look at the difference on the chart. The jagged, erratic bars of the default histogram morph into smooth, rolling waves that track the broader momentum. Standard MACD settings react to every minor price tick on a 15-minute chart. By doubling these values, we force the indicator to ignore intraday noise and only signal when the larger trend shifts. Now that the tools are set, here are the entry rules. For a valid buy signal, a 15-minute candle must push through and fully close above the upper Bollinger Band. Before you enter, you must verify the filter condition. Look straight down at the MACD histogram. The corresponding bar must be green and sitting above the zero line. If a candle closes above the top band, but the MACD is reading negative, the momentum doesn't support the move. Cancel the trade and wait. The exact inverse applies for a sell signal. Wait for a candle to close fully below the lower Bollinger Band and confirm that the MACD histogram is flashing red below zero. This dual confirmation rule acts as a mechanical filter. It requires the market to prove its direction through both price action and momentum before you are allowed to execute. Getting into a trade is only half the system. To preserve your capital, you must never risk more than 1 to 2% of your total account on any single setup. For a buy trade, tuck your stop loss safely below the previous swing low, or just beneath the lower Bollinger Band. For a short position, you will place the stop loss right above the most recent swing high, or above the top band. Finally, stretch your take profit target so your setup mathematically guarantees a risk-to-reward ratio between 1 to 1.35 and 1 to 1.5. Because every winner is mathematically larger than every loser, this 1.5 ratio provides a buffer. With these parameters, you can be wrong half the time and still maintain a positive account balance at the end of the month. You now possess a fully mechanical, customized day trading system that limits exposure and targets high-probability momentum. Success in the 15-minute time frame comes from combining the explosive volatility of a breakout with the mathematical safety of the MACD confirmation. Before you risk any live capital, open your charting platform and rigorously backtest this exact setup. Paper trade the rules until they become automatic. Log every entry and exit in the trading journal. Reviewing your performance is how you refine your execution over time. Long-term wealth in trading comes from the disciplined execution of a single proven model. If you found this breakdown helpful, subscribe to the channel for more step-by-step trading systems.